What is going on? Welcome back to Financial Journey. So today we're going to talk to you about VinFast. I want to go over some of the current data points, what's been coming out from the company itself, and whether right now is a good time to buy or not. Before I get into any of that, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So currently it is down 10.08%, a hell of a lot of volatility. So 699 the low, 792 is the high, and a fair amount of volume. So 5.03 million shares have been traded so far, and there's about 2.5 hours left in the trading day versus 4.5 is the average. So definitely fairly good for that. When it comes down to why it is selling off, it is because of this. So U.S. International Development Financial Corporation signed a LOI considering 500 million loan to VinFast. So bigger picture, I think this really helps VinFast. Does it help shareholders and current shareholders? Definitely not. Plus, especially if you do look at a lot of the news that has been coming out for VinFast, they've been piling on the debt. And of course, a lot of that is long-term debt and some debt that's not necessarily the best, such as even $1 billion through Yorkville. So as soon as I saw that, I knew that was a massive red flag. But keep in mind, I'm not a financial advisor. You guys always do your own due diligence. So in my opinion, I feel like VinFast is just preparing for just the next couple of years, next 2 or 3 years. That way they don't have to have any dilution since then. And plus, I think there's a lot of analysts that are assuming that the market is going to be relatively rocky in the short term. So this is why I feel like they're really trying to accumulate as much money as physically possible. But like I said, that is really affecting and kind of de-incentivizing investors to get into VinFast. And a couple of things I just wanted to share with you since my last VinFast update, which was I think almost a month or a month and a half ago. There was 2 analyst ratings that did come down the pipeline, one of which is 𝗪𝗧𝗪, who does have a 31% success rating. Cantor Fitzgerald did give a buy and a $7 price target. Then there's Daniel Ives, who relatively well-established analyst who does have a 59% success rating, and they are with Wedbush, a buy rating and a $12 price target. So analysts are starting to see VinFast as a fairly good deal, but if you look at a lot of the multiples, it kind of begs to differ. So looking right here, the PS ratio is 19.6. And just to put it in comparison, Lucid itself is at around, I think, 13.5, Rivian's at 8, Tesla's at 3, Polestar's at like 1.5. So there's a lot better deals out there. This is why you're not really seeing a huge jump up in the volume in VinFast despite it going down 10+%. The future is currently at 6.9 as well. So I'm going to go over some things. In my opinion, I do feel that a lot of people are still seeing VinFast as a squeeze play. And I'm going to break it down on what I mean by that. So looking right here, so far shorts are increasing roughly around 75,000 shares. 26.25% of the free float is being shorted. 9.12 million shares overall are being shorted. Cost to borrow average, though, is relatively high, so 331.09%. And through Interactive Broker, short availability does indicate that there is 0 shares available to be shorted. So operationally, I think that VinFast isn't doing nearly what they should be, and they are, for all extensive purposes, considered overvalued. But at the same time, I feel like this is what is alluring a lot of retail investors in, just the likelihood of a squeeze. So once again, that's just my own interpretation. Going over some options activity. And I remember for the longest time, like nobody knew where VinFast was going, but if you kind of looked at the options activity, it gave you a very good signal on where at least big money wanted to take it. So obviously that's a fair assumption, no different than now. $877,000 in calls being purchased versus 1.25 million in puts. So based on this, people are anticipating for it to continue to trend down. I'm going to tie that in with technicals and break that down on what that means. Looking at the calls, this shows the strike price, this is the expiry dates. Based on the calls that is being purchased, it is anticipating for it to be above $7. So obviously not that much upside in my opinion. And looking at the puts, it is anticipated to be sub $7. So clearly that $7 mark is a very strong pivot, even though the week just started. And on Wednesday, I believe is ADP non-farm employment. And then I believe on Friday is non-farm payroll. I could have those backwards, so don't quote me on that. So not necessarily the best information on this, But based on the technicals with it at $7.06, it is trading between this S1 and the pivot. So it's not really doing that well in comparison to a lot of other EVs and growth stocks. Most of them are between the P and the R1, and some are between the R1 and R2. But $5.94 is going to be that next strong support. $7.58 is going to be that next strong resistance. So some things to kind of watch for. But like I've said time and time again in the past, like the gap on these fib levels are very wide. So you have to anticipate that there's a hell of a lot of volatility, and most likely there's going to be a lot of volatility up until well into 2024, especially with the positive momentum that happened last Friday. A lot of people were anticipating that the Feds were in fact going to cut the rates. But so far this morning, a lot of analysts have come out to kind of spread fear, if that makes sense. So Goldman Sachs, New York Mellon, and also there's the TD. They all came out essentially saying that there's downside coming. So I just wanted to quickly play this. It's only a couple of minutes, but this is most likely why VinFast is accumulating more and more available cash. That way they're kind of doing it at the high, if that makes sense. Because if there is more downtrend within the broader market coming, it's more advantageous for them to do it at higher prices. But that's just my own opinion, like I always say.
Points to some further signs of a soft landing and says to believe the Fed's message that a rate cut will not come until the second half of 2024. What does that mean for a market that has been on a roll in the last few weeks? Joining us to discuss here at Post 9, BNY Mellon's head of U.S. Macro, Sonia Meskin. Sonia, welcome. It's good to have you. A lot of discussion about what Powell told us on Friday, particularly the line about being well into restrictive territory. Are we in a phase now where we kind of know what they think they want to do, but they can't afford to say it out loud?
It's possible, it's very possible. But what we really need to see, what we've seen so far, is that inflation has decelerated faster than we were afraid it would happen in 2022, right? So the sacrifice ratio, so-called sacrifice ratio, where unemployment needs to go up by a certain amount for inflation to come down, has been much smaller than was feared a year ago. And if this trend continues, the Fed may very well start cutting rates sooner, but it does need to continue, in fact, in 2024, and I think that that's an open question.
Do you expect it to continue?
We think that there may be certain factors that may be conducive to inflation decelerating this year that may stagnate or even reverse in 2024. So we may, in fact, hover above this 2% core PCE mark for quite some time in 2024. And that would, of course, induce the Fed, all else equal, to start cutting rates later rather than earlier in the year.
Morgan Stanley insinuating in a note that when the Fed does begin to cut rates in 2024, they're assuming that's a definite thing. It is still maintaining a certain level of restrictiveness, that it's not until 2025 when the Fed would move toward an easing cycle. Can you help explain kind of the difference between just cutting rates and then having a bona fide easing cycle? Because I think that helps inform our viewers and investors in terms of the difference here.
Yeah, of course. I think the difference really is in nominal versus real rates, right? And the real rate is nothing else but the rate of growth plus minus inflation. So when we look at inflation decelerating, that means that, and the Fed is maintaining a relatively high nominal rate, that means that the Fed is actually being restrictive. Now, the Fed doesn't know how sustainable this deceleration in inflation is, which is why they're coming out and saying we want to stay restrictive for longer, just to be sure.
Okay, so yeah, there you have it. Obviously went into a little bit more depth, some optimism, but still them along with Goldman Sachs this morning and a couple others are really not necessarily the most optimistic about the foreseeable future. So again, this is what VinFast is doing. So is right now a good time to buy? In my opinion, I would say not so much. I do feel that today's news is probably going to be the last round of any potential money that they're going to be seeking for the next several years. I could be wrong, especially based on their last couple earnings that they did come out. Like, they're burning through a lot of cash, but it's based on what they have available. It's not excessive, that it's unmanageable. So their operations isn't necessarily doing the best. They can improve, but I feel like there needs to be a little bit more of a pullback. In my opinion, anywhere between this range, so this S2 to this S1, so the kind of high 4s to the high 5s might be the best time to buy. So potentially that is once again another retest of the 52-week and all-time low for VinFast, which is currently at $4.59. Let me know your thoughts. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. One final thing I just wanted to share with you, take advantage of this promo, link in the description below and also the comments. Sign up for an account with me, we throw $100 at it and you get 5 free stocks. Each stock is valued up to $2,000. So take advantage of this, link in the description below and also the comments. With all that said, appreciate all you watching.